finally did it. The company led by Michael Saylor, the company famous for one sentence, "Never sell your Bitcoin," has now sold Bitcoin. First Strategy sold 32 Bitcoin between 36th of May and the 31st of May. Then, after announcing its new digital credit capital framework on June 29, Strategy sold another 3,588 BTC for around $216 million. And this is where the story gets interesting, because the sale may not be the real problem. So what changed? Strategy now has several products around its treasury model: STRK, STRF, STRD, and STRC, also called Stretch. They all have different structures, different risks, and different dividend features. But today, I want to focus mainly on Stretch, because STRC is where this story becomes really important. So, STRC was meant to trade around $100. So, Strategy created it with the $100 stated amount, and the dividend can be adjusted to try to keep the price close to that level and reduce volatility. But when Bitcoin was trading lower, STRC fell significantly. It was trading down into the low $70. And if this sounds complicated, you are not alone. Even CZ, the former CEO of Binance, said, "I took multiple attempts trying to understand STRC, and I don't think I understand it fully." So in this video, I will explain what STRC actually is, why Strategy sold Bitcoin, why the company suddenly needs billions of dollars in cash reserves, why they are converting some of their Bitcoin into fiat, and most importantly, what all of this means for Bitcoin holders. And make sure you stay until the end, because I'll give you my personal view. Let's break it down. For years, the story was very simple. Strategy buys Bitcoin. Strategy never sells Bitcoin. That was the whole image. This is why many Bitcoin investors loved him, because while other people were trading, while other companies were scared, Strategy kept buying. When Bitcoin went up, they bought. And when Bitcoin went down, they bought even more. When people laughed at them, they still bought. Even after selling, Strategy still remains the biggest holder of Bitcoin in the world at the time of this recording. So why sell now? Did Michael Saylor suddenly stop believing in Bitcoin? I don't think so. And I don't think this is the real story. The real story is that Strategy no longer just a company holding Bitcoin. Strategy has become a very complicated financial machine, and this machine needs cash. So, and to understand that, we need to understand what STRC is. Let me explain it simply. Stretch, also called STRC, is one of Strategy's preferred stock products. In simple English, investors buy STRC because they want income. They are not buying ordinary Strategy shares. They are buying a product that pays them a dividend. Strategy created STRC with a $100 stated amount, and the dividend can be adjusted to try to keep the market price close to that $100 level. So if STRC trades too low, Strategy can raise the dividend to make it more attractive for investors. And that is exactly what happened. When Bitcoin was trading lower, confidence weakened and STRC fell significantly into the low $70. That created pressure, because STRC is one of the ways Strategy raises money. If investors lose confidence in STRC, it became harder for Strategy to raise money through that product. So Strategy had to send a message to the market. We have liquidity, we can pay dividends, we can support the structure. That is why Strategy introduced the new capital framework, increased the STRC dividend to 12%, built a multi-billion-dollar cash reserve, and eventually converted some of its Bitcoin into fiat. Now the story starts to make sense. Bitcoin is the asset, but dividends, interest payments, and preferred shares need dollars. They need fiat. They need liquidity. This is where Stretch comes in. Now, think about this. If Strategy offers a higher dividend, it has to pay that dividend. And if the company's normal business does not generate enough cash to cover everything, then Strategy needs another source of cash. They can raise money from the market, they can sell shares, they can issue more financial products, or they can sell Bitcoin. And that's what they are doing. And that's exactly what happened. The first sales was small, only 32 Bitcoin. But it was important because it showed something new. It showed that Strategy was willing to sell Bitcoin to fund preferred stock distribution. Then comes the bigger sale, 3,588 Bitcoin, around $216 million. And according to reports, the sale was connected to funding dividends on Strategy's preferred stock and supporting the company's new capital plan. So when people say Saylor sold Bitcoin, yes, Strategy sold Bitcoin, but why? And the answer is liquidity. They need cash, fiat, dollars, because when you promise to pay income to investors, you need to pay them in dollars. You cannot pay preferred stock dividend with a Bitcoin slogan. This is why Strategy created a USD reserve. Strategy said its USD reserve was around 2.55 billion. That reserve is meant to support preferred stock dividend and interest payments. The company said its expected annual preferred stock dividend and interest expenses are around 1.76 billion. So the reserve gives them around 17.4 months of coverage. In simple English, Strategy is saying we have enough cash reserve to keep paying our obligation for now. But here's the problem. If Bitcoin keeps on going lower and trading lower, and if Strategy's products like Stretch trade below where the company wants them, the model becomes harder to manage. Because before Strategy could raise money more easily, people loved the stock. The stock traded at a premium, but investors wanted exposure to Bitcoin through Strategy. But when confidence dropped, when Bitcoin dropped, when Stretch falls into the low $70, the company needed to prove that the structure is still strong. This is why they raised the dividend, and that is why they built the cash reserve, and that is why they opened the door to Bitcoin sale. Now, another important point. Strategy has authorized up to 1.25 billion of Bitcoin monetization capacity under this new framework. That does not mean they will definitely sell all of that, but it means they can. And that is why the market reacted, because for years people thought Strategy's Bitcoin was almost untouchable. Buy, hold, never sell, buy again. But now the market understands something different. Strategies still believe in Bitcoin long term, but if the company needs cash, Bitcoin can be converted into fiat. That changed the psychology. And market moved on psychology. The red candle was not only about the 3,588 Bitcoin. Bitcoin trades billions of dollars every day. The red candles was about fear. It was about trust. And it was about investors asking if Strategy sold once and then sold again, they could sell more. That is the real fear. Now let's talk about the unrealized losses. At the time of this recording, Strategy is sitting on 8.32 billion paper loss because Bitcoin was traded below the company's average purchase price. Paper loss means unrealized. It does not become fully real unless you sell. But when the company actually sells some Bitcoin below its average purchase price, that makes people nervous because they are selling at a loss. And now the question, is Strategy still in control, or is this structure starting to control Strategy? Strategy still owns a massive amount of Bitcoin, but now the story has changed. Strategy is not just a Bitcoin holder anymore. It is now a complex financial company built around Bitcoin. It has preferred stock, it has dividends, it has interest payments, different products, it has cash reserves, it has investors who expect income, and it has Bitcoin as the main asset behind the whole story. This is powerful, but this is also risky because Leverage makes everything bigger when the market is going up, and leverage makes the gains look amazing. But when the market goes down, leverage works against you. And this is the part many people don't really talk about. The never sell Bitcoin philosophy is easy when you have no obligation. But when you create product with high dividends, when you promise income, when you need billions in reserves, then suddenly holding forever becomes more complicated. This is why I think this story matters. Not because Strategy sold a small percentage of its Bitcoin, but because it shows the difference between owning Bitcoin directly and owning a company that owns Bitcoin, a third party. These are not the same thing. Strategy is a company. Bitcoin is a network. Strategy has a CEO. Bitcoin does not, and Strategy has debt. Bitcoin does not. Strategy has preferred stock dividends. Bitcoin does not. Strategy needs fiat reserves and Bitcoin does not. And this is the most important lesson for Bitcoin holders. Do not confuse Strategy with Bitcoin. Strategy may buy Bitcoin, they may sell Bitcoin, and also they may create new products. And that becomes more complicated, but Bitcoin itself did not change. The network did not change, and the protocol is still the same. The supply is still limited and all the rules are still the same. And if you hold your own Bitcoin in self-custody and not inside Strategy's balance sheet, so it's all yours. If you control your private keys, you control the Bitcoin. This is why I always say self-custody matters. Because if you own Bitcoin directly, you do not need to panic every time one company changes its strategy. You still need to understand the market. You still need to understand the risk management, and you need to know the price can go down and the price can go out, but you should not panic just because a company is converting some Bitcoin into fiat to manage its financial structure. Now, here's my personal view. I think Michael Saylor built one of the most powerful Bitcoin treasury stories in the history. But I also think Strategy has become much more complicated than before. And when something becomes complicated, investors need to pay attention because the risk is no longer just Bitcoin price and volatility that Stretch was supposed to remove. The risk is the structure around it. The dividend, the leverage, the reserves, the preferred stock, the ability to raise money, and all that. Now Strategy has evolved to a complex financial company using Bitcoin as its core asset. And that is very different. So my advice, understand what Stretch is, understand what that product is, and if it is still too complicated for you, why not just buy Bitcoin, practice self-custody, and hold it. Now my question for you. Do you think Strategy made the right move by selling Bitcoin to protect its structure? Or do you think this breaks the never sell Bitcoin story forever? Let me know in the comments below. And if this video helped you understand what is really happening, make sure you like and subscribe to help this channel reach more people. My name is Lamia. Thank you so much for watching, and I'll catch you in the next one.